Your investment options exceed much more than stocks. Here's why and how to choose the best investment in 2023 for you. Hi guys. Welcome to the Wealth Immeasurable channel. In this video, we will discover investment opportunities. As seen during the pandemic, what appears to be a stable economy can quickly turn upside down. In the blink of an eye, many people lost their jobs and household income and found it difficult to make ends meet. With inflation rates rising to all-time highs, many financial advisors will tell you that investing may be the only way to combat this. However, that is not the only reason you should invest. Investing allows you to earn passive income while your money works for you. In the dynamic world of finance and investments, identifying the most prominent growth for long-term growth is an attempt to attract attraction and disappear. The global economy is subject to various factors that influence market trends and has always proven the ability to deliver significant benefits within a broad period. Regardless of whether you use a traditional financial advisor, or robo-advisor, or do all your investing yourself, there are many different ways to invest your hard-earned money. Many platforms, including brokerage firms, allow you to monitor your portfolio and trade in real time. You can even invest using any number of mobile apps, which is especially important if you usually do all your investing on the go. But investing for long-term growth is very different from day trading, and the investments you choose should reflect your long-term time frame. For example, if you invest within a 20-year or 30-year time frame, your investment choices will need to change if you need the money next year. Whether you dollar-cost averaging or adding lump sums whenever you can, here are 5 investment options that can help you build existing wealth. Let's get started. Number 1. Index funds. An index fund is a type of mutual fund that holds shares of a certain market index. The goal is to provide investment returns that match the performance of the underlying index, as opposed to an actively managed mutual fund that pays a professional to settle a fund's shares. Index mutual funds are some of the best investments available for long-term savings goals. In addition to being more profitable due to lower fund management fees, index mutual funds are less volatile than actively managed funds that try to beat the market. Index funds are especially well suited for younger investors with a longer time horizon who can allocate more of their portfolios to stock funds, which offer higher returns than conservative investments like bonds. Researchers said that young investors who can emotionally withstand the ups and downs of the market may even do well to invest their entire portfolio in equity funds at an early stage. Index funds are available directly from fund providers or through a discount broker. Number 2. Money market funds. Money market mutual funds are investment product, which is bank deposit accounts equal to savings accounts. When you invest in a cash market fund, your money prices a collection of high-term, short-term government, bank, or corporate loans. You may need to quickly want to exposure a little more market risk. Investors are using a section of their portfolios for a secure investment for the money or a secure investment for future investment. Do not expect the technical investment of the money market fund technically, and do not expect higher returns and greater risk. Cash market fund growth is equivalent to a high-yield savings account. Money market funds can be purchased directly from a mutual fund supplier. Before moving to the next opportunity, subscribe to the channel to get more valuable information about a wealthy life. Number 3. Dividend stock. The dividend stocks can provide stable income as well as the growth of single parts and stock funds. Dividend-paid companies pay shareholders and are often associated with fixed, profitable companies. In some dividend stock prices, the price of stock prices will not rise or quickly increase, and their dividends and stability can be attractive to investors. Dividend divisions in taxable brokerage accounts will be taxed in the dividends. Stocks are primarily taxed and the consignment is sold. In the first place, for the first time, any investor from retirement to a pensioner, any investor has specific dividend stocks, specialized dividend stocks according to their investment. For example, young investors are good to look into dividend growers, companies, and companies with a strong record of continuing their dividends. These companies may not currently have a high yield, but if their dividend growth continues, they were able to in the future. Old investors who look for more stability or fixed income can be considered consistent dividend pays. In a short time period, it may not be the target to reinvest in these dividends. Instead, it may be part of a fixed income investment plan as dividend money. The easiest way to buy dividend stocks is through an online broker. Number 4. Real estate. Traditional real estate is buying a property and then selling it as a fixed income of the property for profit. But there are several more. There are ways of expensive to invest in real estate. One common method is real trading investments or reconciliation. Provide companies and regular dividend payments. Property shanties, which often give investors money for the money of the investors of real estate, are popular in recent years. Investors who have already found a healthy investment portfolio and are more diversified are preferred to be more REITs. Real estate investment is amazing, so any amount of money you want to access investors should not be included in an investor. Some of them can purchase reinstallation in the public stock market, and others are available only in the private market. Similarly, some folk congestion is open to acclaimed investors and others do not limit who can invest. Number 5. Mutual funds. A mutual fund pools money from investors to buy stocks, bonds, or other assets. Mutual funds offer investors an inexpensive way to diversify, spread their money across multiple investments, and protect against losses on any single investment. If you're saving for retirement or another long-term goal, mutual funds are an easy way to get exposure to superior investment returns in the stock market without having to buy and manage an individual stock portfolio. Some funds limit the scope of their investments to companies that fit specific criteria, such as technology companies in the biotechnology industry or companies that pay high dividends. It allows you to focus on certain investment positions. Mutual funds are available directly from the companies that manage them as well as through discount brokerage firms. Almost all of the mutual fund providers we review offer transaction fee-free mutual funds, meaning no commissions, as well as tools to help you choose funds. Keep in mind that mutual funds typically require a minimum initial investment of $500 to several $1,000s, but some providers will waive the minimum if you agree to set up automatic monthly investments. When looking for the best ways to invest for the long haul, there are a number of important things to keep in mind. This includes taxes and fees, both of which can make your investments less efficient and lose your returns over time. Variable life insurance is generally only suitable for people who have a deep understanding of their investment strategies. Casey points out that funds dedicated to retirement should be invested in tax-advantaged accounts like IRAs and 401ks because they offer significant advantages over tax-free compounding over the long term. Also, investors should closely examine any fees associated with the investments they are considering, whether to invest in REITs or mutual funds. No-fee investors can find options that aren't actively managed, such as index funds and many ETFs. Finally, remember that high-return investments are always high risk and should take into account your time horizon and risk tolerance. In conclusion, identifying the best investment opportunities for long-term growth requires a comprehensive understanding of market trends, technological advancements, and socio-economic factors. The 5 investment avenues discussed in this video represent sectors poised for sustainable growth. By diversifying investment portfolios and carefully selecting opportunities within these sectors, investors can position themselves to reap the benefits of long-term prosperity while contributing to positive global change. Thank you for watching. Hope you enjoyed the video. Don't forget to give it a thumbs up, hit the bell icon, and follow for more.